So like we said a few weeks ago, we're gonna we changed up the our Tuesday meetings, and we're gonna bring on and spice it up a little bit and change it up for you guys. But today, yeah, we're gonna devote our time with some really calling it case studies on loan files. So last week I asked you guys to, if you had any files that you guys wanted to discuss, to bring it forth, particularly those that one, you had a really hard time getting approved. Okay. Two, ones that have been rejected. Okay. Talking about why it got rejected and potentially looking at, could there been a solution to this or an option, right? Ones that were just ones that decided to go elsewhere and why. Okay. And not just the rate, guys, because we can look at the rate and I could easily say, or one of us can easily tell each other, hey, just make less money on it, right? So not necessarily the rate, but perhaps the client said someone found an option elsewhere. So that's going to be the one I'm going to kick off with you guys first. Okay, this one's going to be kind of fun. Okay, I want us to have fun. I want this to be very interactive. Let's talk through it as if we're in person in a meeting. Okay, so here's a scenario I'm going to share you guys. And sorry, it's not all jazzed up. All right, here's a loan scenario. And let's talk this through and let's walk it through, guys, together. Okay, and you tell me, what are you thinking? Okay, what are you thinking? Here it is, guys. FICO score 667. Self-employed since 2018. She does child care services. Monthly, I'm going to explain this. I'll come back to it. But monthly, they're making somewhere between $2,500 to $4,000 a month. That's gross. Okay. She has $25,000 of her own funds, and then will be gifted $25,000 from a parent. The husband also works, but I didn't get into the FICO score or anything like that because, so he just started a new job, relatively new job back in October, as a W-2 employee. But previous to that, he was self-employed. He just had odd jobs, literally. He did a little bit of Uber. He did some handyman work. He did some gardening work. He literally had a bunch of odd jobs. The problem is this. He has not filed tax returns for 4 years, and everything outside of like the Uber, and it was like a few $100 here and there, it was all cash. Okay. Now, with this information, guys, I want to pose to you and assume that they only have $500 in other total debt. That includes a $350, I should have wrote it in here, a $350 a month auto payment, and $150 other revolving debt. That's it. Okay. The reason for the FICO score, okay, is because they had some collections and so on in the past. Okay. Just off the top of your head, I just told you that it's gross. Okay. But off the top of your head, what are you telling yourself as a loan officer how much this person can qualify? Just quickly, guys. I pretend I'm the client. I just told you all this. See, Alex, loan officer, whoever else is on. How much can I qualify for? What are you guys already thinking?
I think we need additional information.
I don't know, like 160,000, 200.
I'm sorry. Let's start with Peter.
Sorry, Peter.
I think we need additional information. Just with
such as what?
Like 12 month bank statements or have any CPA we can work with together.
Okay. So obviously Peter is going towards like non-QM, right? Yep. Okay. C, what about you?
if we're not going non-QM, we're looking at a price range of about 160 to 200.
Yes, exactly, right. And you're really telling, if you're thinking, so see if you are thinking QM, right, you're probably thinking, hey, this person, I gotta tell them to go kick sand, right? Because where are you gonna find $150,000? Let's just say 200,000. Now Peter, obviously, naturally, guys, right? Because what tells you right away when you get on this phone call, hey, we should go non-QM?
Tax return not filed for the last 4 years.
Yeah, exactly, right? They're self-employed guys. They don't have tax returns. We can't even, if you wanted to go, we can't even go, conventional really, right? So because there's no tax returns. So we have to go non-QM. So that's number one, right? Now, here's the problem when we dive into this, guys, right? The FICO score, right? Initially, as you see this and you hear this, you're like, wow, 667 is really not a good score, right? It's okay, but it's not. Now, for non-QM, what might be the hurdles in this outside of the CPA and the bank statements? What might be the hurdles here for non-QM?
Business as a childcare, there are some investors not accepting that business as an acceptable income.
Yep. Oh, I should state, so on Peter's note, okay, operated out of their current residence in an apartment.
Oh my goodness.
Yeah, okay, thank you. There you go.
So much.
No, yeah, that was that's a crucial one that I missed there. Okay, good. Right. What else? What's another variable to this scenario where you're just like, oh, I don't know even if non-QM is gonna work for this? Anyone else? Anyone else?
Do they allow gift funds for non-QM?
They do, but you're on the right track right now. It has to do with assets.
Maybe reserve issues.
Bingo. Reserve issues might be an issue when it comes to non-QM. There's another one that I'll just say it is, we're only working with about $50,000 here, right? If let's just say we go very, very, very aggressive and say closing costs $10,000, $40,000 for down payment, and this person we want to get realistically somewhere in $500,000 to $600,000 to $700,000. Just keep in mind, remember, traditionally and historically, non-QM, is it a higher LTV or a lower LTV than the conventional counterpart?
Higher. Or lower LTV.
Lower LTV, right? So higher down payment. Conventional FHA, 3%, 3.5%, 5%. But remember, historically, traditionally speaking with non-QM, 25%, 30% down payment. Yes, now in post-COVID and in 2026, yes, you're gonna see non-QM P&L or bank statement that offers 20%, 15%, maybe a 10%, right? But that's usually about the cap, right? So already in my mind, I'm thinking, oh, I want to go non-QM, yes, because no tax returns, alternative to tax returns, P&L or bank statements, but then, whoa, the let alone the reserves, there might not be enough down payment here, right? We're gonna need to get more funds somehow, okay? So ultimately, what happened was with this was I just said, I didn't say they don't qualify, but my approach was with both. I gave them both, okay? I said, we could consider non-QM, okay? But you're gonna, based on just the current funds that are available that you have told me, okay? Assuming nothing else, and it really was nothing else. They have nothing else. I just gave them like a range of 400 to 450. Okay, purchase price, and because of their FICO score at 10% down, this is not me pricing, or I priced it out, but not digging into the guideline. I said at best their rate is going to be like an 8.25. That's what came up on Loan Sifter. Okay, and this is assuming that they had the reserves. Okay, because again, this is a FICO score at 10%. And then here's the other thing. Even if we went bank statements, so she said that she gets paid every month anywhere between $25,000 to $4,000. She doesn't deposit all the cash. It is cash basis. She doesn't deposit. That was another reason why the bank statement program was a little bit iffy to go with. Okay. But that's even if she, let's just say on best case scenario, guys, let's say she deposits all $4,000 of cash into her bank. Okay. All right. And let's just assume, let's just match it. Let's say that the husband, because he works odd jobs, he deposits another $4,000 in that same bank account to use as through the 12-month business bank statement program. 4,000 plus 4,000 is what? 8,000. Let's just say we go super aggressive, and say that expense ratio of 10%. Okay, so that's 8,000 times 0.9, right? That's $7,200, right? $7,200. If their mortgage on an 8%, or their mortgage on an 8% with taxes and insurance on a $500,000 house, and you want to just kind of figure out what that is real quickly? Can anyone do it real quick? On a $500,000 down, or a $500,000 purchase price with 10% down, no HOA, okay, no HOA, but on an 8.25 rate, what is their payment going to be, guys? Just roughly off the top of your head, can anyone figure it out?
$3,380.
Yeah, $3,380, right? We're really close. We're really 38. So get your calculator out right now, right? So mark 7,200. So 3,830 plus about $500 divided by 7,200. You're at 60% of DTI. Do you guys all follow? This is a very, very tough situation. Okay, very tough situation. So, and that's for, again, a $500,000 purchase price, right? So, let me go back. Sorry. So what happened was this person said, "Oh, this is too well." I just told them, "Look, with conventional, if we go FHA, you're gonna probably qualify for somewhere about $150,000. If you go non-QM, you'll probably qualify somewhere around like $400,000 ish." Okay. Few days later, this client comes back and provides me this LE, guys. This gets so fun. You guys all see that? Look at that. What do you guys, what's your first takeaway here?
FHA VOE, maybe.
Yeah. Okay, Peter. I should have Peter not answer. Okay, so
I'll mute
yeah,
myself.
no, it's okay. So yeah, the first thing you're gonna notice is one, you're gonna be like 650. I just said 400 is not possible, but wow, 650. And then you go to the right top, and then you see that it's FHA checked, right? FHA checked. And then you scroll down. So mark this. And then you look at the rate. You're like, wow, this guy is quoting, this client is being quoted a 6.75 on an FHA deal, where FHA wholesale rate sheets at par were what? At worst case scenario was like 5.75, right? Right now it's in the low fives. So this person is either giving a major rebate or getting a major rebate, or going to give this client a major credit. And look at this. Lender credit 0 with an origination fee of $15,000. I want to know, this guy's probably making 6% total, right? I mean, this guy is making, what is that? 6% of like 36 grand off of this one deal, right? if I did the math right. So a lot of money this guy is charging. So what is going on here really? How 39,000. So how is this guy? What is this lender doing? This lender is doing what Peter just said, the FHA VOE program. Okay. So I called this lender. I called in with my wife's phone. I called in to speak to a loan officer. And because I knew I knew that I assumed the same thing. I assumed that this is a VOE FHA. I asked them, well, this person is self-employed. So I just straight up called the loan. I got transferred to a loan officer. And I said, hey, someone that I know told me to give you guys a call because I was told that you guys have like this VOE FHA program. I called the lender. And I just said, hey, my mom and dad have bought houses before in the past. I've been a part of it. I've never owned a home, but I just want to know how this works. Like, I get the lingo. I was just letting the loan officer know, hey, I know the lingo and stuff. Like, how does this work? Okay. By the way, I'm self-employed. I just told them I run a restaurant. And they asked, hey, do you work with a CPA? I'm like, yeah. Well, like, they straight up just asked me, hey, like, how's your relationship with your CPA? And I just lied. And I said, they're just a CPA. He's like, oh, okay. And he just basically said, this is how it works. And how it works is that they have professionals, as long as we're willing to, go through with it, meet the down payment requirement. All we need is a minimum I forgot that they say it's 620 or 640. As long as you meet the FICO requirement, and as long as you have the down payment, and as long as you have, you're okay with potentially an extended escrow, 45 days to 60 days, we can get your verification approved. So I just pressed forward and I said, how is that possible? Like, what if my CPA doesn't want to do it or my employer doesn't want to do it? And he goes, we have investors that, and so he explained it. And he says, ultimately, my job is to deliver the loan to the investor. And so we have an underwriting team who can basically, how do they say? We have an underwriting team who works with professionals that can help get your income verified for your industry. And I said, oh, really? And so I just asked, is this for all industries? Is this for anyone? And they said, yes, this is just about any industry, and we can help out with anyone as long as you can meet the FICO down payment and understand that there are going to be an extended escrow periods. So that's where right then and there, didn't want to straight out say it, but they probably are working with some type of company, an employer, or a CPA that's willing to vouch for it and say and mark it on a piece of paper on the form to get this approved. So anyways, a client comes back and she says, you see the name actually. So, hey, Rogner, well, this lender said that we can do this, but I was a little skeptical. Can you take a look at this? And I was just like, wow, this is amazing. The first thing I said to her, wow, you're going to make this loan officer super rich. That's what I said. And then she said, that's what I thought. And I said, yeah. And so I wanted to make it sound worse. So I said, if you were to apply for a regular FHA loan, by the way, you wouldn't qualify for it because your tax returns show $13,000 a year in net income with no add backs. Your rate would be, I would sell you at a rate of 5.75 today. And I would probably charge you maybe $2,000. She goes, oh, wow. So how are they doing it? So I straight up told them. And because this is it's from a agent that I know, I told them hey, this is what's going on. So if you want to go with it, fine, but I can't do this. I'm not willing to do this, nor do I have it. I might have it, but not going to go that far with this. Doesn't make sense, right? It just doesn't make sense. And so I lost the deal. Did I lose the deal or did I win the deal, right? Or did I save face? That's up to you to decide, but that is a scenario there. You guys have any questions or thoughts on this one?
I want to make a comment about this.
Sure.
There is a company called American Financial Network that just went to bankrupt because of a FHA VOE product. That's why if you Google search, now by law, they cannot legally market FHA VOEs. Conventional VOEs are fine. There are 7-8 different investors purchasing it, even at this time. However, FHA VOE must be sold directly to FHA. So as a company guideline, we don't work with wholesale lenders, or we're not going to engage with any activities with FHA VOE product. It's too risky. There's no second strikeout rule.
Yeah.
You have one shot to make it happen. If you fail it because of a misleading information, or if a borrower comes back and say, oh no, Peter asked me to talk to the employer and touch the numbers, anything like that happens, then your license is jeopardized. That's when you see loan officers have random consent orders on the NMLS consumer pages. Out of the blue, random companies just disappear because of one shot. We know, like this FHA product has a big FBI, the Eagle logo under the fair housing agreement. You have to notarize. Borrower has to notarize. So this is very difficult document to sell. So my recommendation, try everything we have to transfer this into conventional VOE product, and I will help you to structure a loan personally.
Okay.
Please reach out to me personally in a case like this. But yes.
Good to know. Thank you. Good to know. For the sake of time, because I did go over a little bit, I know I had another scenario which will be really quick. Is there any scenarios that you guys want to bring and share?
I have a scenario. I recently had a pre-approval for DSCR cash out transactions. There were 2 mortgage late payments. So by underwriting guidelines, it was not allowing us to even price out the loan. We asked Logan Finance to provide an exception rules, and they approved it. So a dead deal that was going nowhere, we were able to sell. We pre-quoted at 6.375 with DSCR at 1%, but we ended up selling at 7.5% 30 years, making 2.75% rebate on us, similar on the same deal, because the borrower didn't understand the importance of mortgage late. After the multiple failures from different companies, came back and agreed to write the loans with us. So with non-QMs, there are exception rules and apply underwriting guidelines apply separately. So if you have anything that goes outside the grid, outside the underwriting matrices, don't give up yet. Reach out to the AE directly, or reach out to one of us, me or Brenda, or Gia, or anyone, so that we can help you to get to the next level.
Thank you. Alex, C, Ian, any files you want to discuss? Okay, then with the few minutes that I have left, I'm gonna share another file that I actually learned from after many years in the industry. Almost embarrassing, but I did learn something. Okay, so I'm gonna bring this one back up. I may have mentioned it to you guys last week, or may not actually, but here it is. Okay, so this entails a VA, my client's VA. Okay, look, if you look at the file, it's awesome. VA 782 FICO. We're not dealing with employment or anything like that, so this is easy, right? You got a $4,600 pension a month. You got $1,800 in Social Security, 27. So great income, right? About $10,000 right there, right? They were looking for a $250,000 manufactured home. Okay, They were looking for a $250,000 manufactured home. They have virtually, just call it zero debt. Okay. So this is just like A++ paper type of file, right? It's retirement, borrower looking for a, great cash flow, looking for a 250,000 manufactured home, obviously 0% down because it's VA. Okay. Now, so why is this a fun case? So this client, a borrower, submitted a loan offer, and we actually got approval. We got approval on this, and we actually got, I'll show you this real quick. We got a same-day approval. Okay, same-day approval. It was awesome. As soon as our team, and shout out to Sydney, and the rest of the team, so we submitted this loan file, and the very same day, that evening, UWM, you see it here, 4:36 p.m. approves the loan. Okay, and then one of the conditions is a condo approval. Okay, why? Because of this HOA. Okay, so it was assumed. Okay, it was assumed that that this was a manufactured condo. Okay, so one thing that I learned was that many, if not most lenders, do not do manufactured homes, especially under the VA program. Okay, under the VA program, I want to be clear. I didn't say FHA, I didn't say conventional, okay, guys? I said under the VA program, many lenders do not take manufactured condos. Okay, and so I called the HOA. I was like, oh my gosh, I didn't know this. So I called the HOA manager, finally got through, and she said, condo cert? We don't do condo certs. I'm like, what do you mean you don't do condo certs? There's an HOA. It's like, yeah, but this is a 55, an older community, and we just have a $55 annual for legal representation. There's no other budget for anything in this HOA. I go, oh. I was like, so when's the last time that you guys have done a VA a condo? She goes, I've been the president for 7 years and I haven't done one in 7 years. What about FHA? She goes, no, not FHA. I go, okay. So when people purchase not cash, how are they getting financing? She goes, a lot of it's private money. I was like, oh, okay. So that leads me to say that, because our team ran the VA condo approval list and it wasn't on there. And so that lead me to say, oh, everyone's going, everyone's getting financing, or everyone's just purchasing it through cash or getting private financing. That's why the manager said it, right? So we canceled escrow. Okay, the borrowers decided to cancel escrow, and they, they're fine with it. They went to go look. But this was through, okay, I think I deleted some of the emails, guys, okay, but basically I did through ChatGPT and all elsewhere, and I made a very a rookie mistake, guys. Okay, this is what I want to share with you as a loan officer. And so I should have done this first, okay? And so I reached out to my title rep to ask for a preliminary report. You guys know what a preliminary report is? It's like a beefed up property profile, okay? And according to this, there is a county, there is no condo writer, okay? But instead, guys, team, there is a, did I miss it? Boom. A PUD writer, not a condo writer, but a PUD. Do you guys know what a PUD is, a plan unit development? Do you know how it's treated for the most part? Let me ask you this. Under a PUD, do you own the land or not? Anyone know? Anyone know? Under a PUD, you own the land. In a condo, do you own the land? No. But a plan unit, a PUD, you own the land, so we can treat this as an SFR. Okay? And so I took this back to Rocket. Common is, if a manufactured home has an HOA, does this mean it's a condo? No. Just because the home is located in HOA does not automatically make it a condo. This was a PUD, okay? If the manufactured is not treated as a condo, it's a PUD, it's eligible. So what did I learn from this? I made a mistake. I told everyone the wrong information. I failed. Okay. I should have done my further due diligence. I should have requested a preliminary, and that's why it's important to have a relationship with escrow and title and stuff. I should have pulled a preliminary report on that. Just because the HOA the HOA manager or president said, no, we've never seen a VA loan or an FHA loan. We've never done I wasn't thinking, oh, it's because it's rejected. It's because it's not needed, because it's a PUD. It's not a condo. So an HOA certification was not required for this property, this project. I made a huge mistake. I still haven't told the agent. Okay, it's okay. They didn't like the property anyways, and so they're looking elsewhere. But I wanted to share you that file because it was something that can potentially have been catastrophic, right? What if this was an $800,000 purchase price? It matters sometimes, right? Purchase price matters, especially with agents. So I want to share that. Do you guys have any questions before I let you guys go? No? Okay. Well, Peter, that's it for me, guys. Again, we'll have this, guys. I hope this is helpful. It's helpful for me just to learn and, keep this on top of mind as we're meeting with clients and, working on pre-approvals and whatnot. But again, we'll hold these every month, and please do bring scenarios so we can talk about it, discuss it, and learn from it ultimately. Peter, any lasting thoughts or comments before we end?
Not necessarily. We will continuously change the topics and the information. So if you have any suggestions, please reach out to me. Then I'll implement it on the regular schedules. We did the lender talk for a while, but we're not going to invite the AEs. Ragnar and I will pre-review the highlighted programs, and then we'll deliver it more effectively, so we don't have to go outside the regular 45-minute box as well. Alrighty, thank you everyone. Thank you, Ragnar. Have a great week, and I'll see you all next week.